The crypto markets have been a sea of red lately, with Bitcoin leading the charge downwards. So, what's really going on behind the scenes? Is this just a temporary correction, or is it a sign of deeper troubles? In this breakdown, we're going to dive into all the key factors driving this volatility, from macroeconomic pressures to massive on-chain movements. Here's our game plan. First, we'll look at the initial drop and what the numbers are telling us. Then we're going to zoom out to see the big picture and the major influence of the US Federal Reserve. After that, we'll dive into the crypto-specific factors that added fuel to the fire, check in on how altcoins are holding up, and finally, we'll map out the critical price levels you need to be watching to understand what's next. The turbulence in the market really kicked off right at the start of the week. But this wasn't a slow leak. It was a sharp, decisive drop that caught a lot of people off guard and sent a wave of fear across the entire market. To put a number on it, Bitcoin lost over 2.86% in just one day. Now, in the fast-moving world of crypto, that might not seem earth-shattering on its own, but it represents a serious loss of value, and more importantly, it was a clear signal that the bears, the ones betting on a price drop, were taking control. And that percentage drop brought the price all the way down to this level, $106,930. The break below this key psychological and technical level is what triggered a cascade of liquidations and selling, a real domino effect that we're about to get into. So what was the why behind this sudden plunge? Well, to find the answer, we have to look outside the crypto world for a moment and zoom out to the bigger picture. And that leads us straight to the US Federal Reserve. Because the Fed's decisions create ripples that are felt across all risk asset markets, and crypto is definitely no exception. And here's the spark that lit the fuse. Recent comments from Fed Chair Jerome Powell basically poured a bucket of cold water on the market's hopes for a new interest rate cut. When the expectation is that the cost of borrowing money will stay higher for longer, investors get nervous, and they tend to pull their money out of assets they see as risky, like Bitcoin. Now, what's so interesting about this slide is how perfectly it shows that change in market sentiment. You can see on the left, before Powell spoke, the market was pricing in a 90% chance of a rate cut in December. And after he spoke, that probability plunged all the way down to 63%, as you see on the right. This just perfectly illustrates the uncertainty that spooked the markets. But the Fed isn't the whole story. The macro environment created the fear, yes, but it was the internal dynamics of the crypto market itself that turned that fear into a wildfire. So if the Fed lit the match, what poured the gasoline? Let's take a look at the market-specific factors that accelerated the fall. There were four main internal pressures that fueled this drop: a massive wave of liquidations, some very large whale movements, serious outflows from the institution-focused ETFs, and the failure to break a critical technical price ceiling. Let's dig into how each of these contributed to this perfect storm. First up, the liquidations. In just 24 hours, a whopping $400 million in leveraged long positions, bets that the price would go up, were completely wiped out. When the price falls, these automatic sell orders kick in, adding huge selling pressure to the market, which of course causes the price to fall even faster. Next up, the whales. On top of the liquidations, we saw this jaw-dropping number, $1.5 billion. That's the value of 13,000 Bitcoin that one single large investor moved from their wallet onto exchanges. And when a whale moves that kind of money onto an exchange, it's typically a classic sign they're getting ready to sell. And it wasn't just individual whales either. Institutional money was heading for the exits too. The major spot Bitcoin ETFs, the funds run by big players like BlackRock and ARK Invest, saw over $1.15 billion in net outflows in just 1 week. That tells you that even the biggest funds were starting to get worried. So, with Bitcoin taking such a hard hit, what does all of this mean for the rest of the crypto market? As the old saying goes, when Bitcoin sneezes, the altcoin market catches a cold. Let's take a look at how the alts are holding up in this storm. To measure this, we have a pretty handy tool called the Altcoin Season Index. It's a simple but powerful metric that tracks how the top altcoins are performing against Bitcoin. And when this index crosses 75, it's historically been seen as a signal that altcoins are about to take off and that an altcoin season has begun. So, where are we right now? Well, as you can see from this chart, the index is sitting at just 41. We're a long way from that magic number of 75. This tells us that despite some individual success stories, we're not yet seeing that broad shift of capital from Bitcoin into altcoins. But some analysts believe that hope for an altcoin rally isn't lost yet. According to the analyst Virtual Bacon, the key is once again in the Fed's hands. A policy shift, a loosening move like cutting rates and pumping money into the market, could be the spark that ignites the altcoin market down the line. The critical point is it all comes back to that macroeconomic big picture.
All right, so in the midst of all this chaos, what's next? What should we be watching from here? The market has drawn some very clear lines in the sand that could determine Bitcoin's next big move. So let's focus on those lines now.
These are the two numbers that matter most right now. On the downside, we have strong support at the $105,000 level. This is a key area where buyers have stepped in before, and if it breaks, we could see the next leg down. On the upside, the bulls need to reclaim $113,000. A sustained move above that resistance would be a strong signal that the worst is over and a recovery is underway.
And that leaves us with the big question. Was this a sharp but temporary storm, or is it the first wave of a longer-term downtrend? The answer likely lies in the Fed's next move and whether Bitcoin can hold that critical support line. The story of the market is still being written.